Hello guys, thank you that you're here again on this meeting. I appreciate. And today's main topic is trading indicators. The technical indicators like stochastic RSI, Bollinger bands, and moving average. So, I mentioned in our group that I will review a MACD indicator also, but at the end of the start, when I was getting to start, I changed my mind, and instead of MACD, I will review today moving average, stochastic RSI, and Bollinger bands, because these three indicators are similar, and for you to understand, it will be easier in this tutorial to review these three indicators. Later in the next tutorial, I will review MACD and also similar indicator to MACD. Okay, now let's remember what was the topic of last meeting. It was stocks, right? Stock markets and day trading with stock markets. So it means that we can trade every asset, every markets in day trading. And also indicators, technical indicators are applicable for every markets. We don't need to trade only Forex, for example, or only indices, or only Bitcoin to be successful. We can use every trading indicator, different trading indicators, and apply on different markets and be successful also. All right, so this was the topic of the last meeting, that we can also trade stock markets, because I see a lot of times, I see often that the beginners who are coming into this industry are pushing to Forex, only Forex. And they think that from the Forex they can be successful, but stocks are a little bit tricky, or maybe index is a little bit tricky. But I would tell you that it's not true. I mean, you can also trade on stocks, also trade on indices, and be potentially same successful as on Forex. Just the little difference is that some markets are volatile, some markets are not so volatile. So stock markets, in comparing with Forex, for example, or index market, is not volatile. But also in stock markets, there are different stocks which are volatile. You need just a little bit to search and discover these markets. Every market has own pros and cons, okay? If you trade on Forex, then it can be volatile, you can make good profits, you can analyze it good with technical analysis, but it can be also tricky and risky, and it can have big breakouts. So in one day you can just lose everything if you don't have correct risk management. And on the other hand, stock can be stable, you can trade on following the trend, you can invest in stock, and after 1 month get some good profits. Okay, me personally, I like to trade stocks when I invest a little bit long term. I like to trade Forex or index when I trade daily. Okay, so now the main topic, RSI, the technical analysis, RSI, stochastic RSI, Bollinger bands, and moving average. Now, how they help us to analyze markets. First of all, there are two types of trading, right? When we follow the trend, and which means if the trend is bearish, okay, if the trend is downtrend and the price goes down, then we follow the trend also, and we trade on sell, right? We short the asset. But when the trend is upwards, when the price goes up, like here, for example, yeah, you see this long trend is bullish. From here, this point to this point, all the way up. So when we follow the trend, we will trade on buy, okay? Doesn't matter where we are. We are here, we are here, we are here in this moment, we will trade on buy. And second type of trading is when we trade on breakouts. What is breakout? Breakout is when the price reverses and changes its direction. For example, the trend is bullish, and on this point breaks out and has strong reversal, strong downward movement. And if we trade on breakouts, we need to find this point, this kind of points, and start trading on opposite side. Okay, if trend is bullish and the price goes up, then we find this point and we start selling. In this moment, we make money. So, as I said, two types of trading, right? We follow the trend, we buy when the price goes up, and when we sell when we find breakout, or buy when we find breakout, which means if the trend is bullish, it goes down, we find the point when it reverses and starting going up. For example, here, the trend is bullish, it comes down, and on this point, it breaks out, changes the direction, and starts going up with a strong movement. So in this moment, we could make really good profit. Okay, now how to find these points? Exactly, that's why we need technical indicators. To find these value moments, to find these value points where trade breaks out or it's good timing to jump into trade. Okay, usually indicators are connected with a lot of numbers and mathematics and this and that, because what is indicator? The technical indicator is a bunch of different mathematical formulas, okay? But in this case, I never liked mathematics. I was not really good in school, so I don't care about mathematics, and I will teach you guys these indicators really easy way, without any formals, without any numbers, because I do so. I don't really need to know which formula is this indicator to understand the trend. And for me, it's going good. And I think for you, it will work also. So again, the three indicators: stochastic RSI, Bollinger Band, and moving average. I want to start with moving average. What is moving average? You see this brown line following the trend. This is the moving average. This moving average is together with Bollinger Band, but if we delete Bollinger Band, now we have clear chart, right? Let's add only moving average on this chart. Moving average, and the moving average is added. You see this green line following the trend. So moving average can be different. It can be 10 days, 15 days, 20 days, 50 days. Usually traders use 10, 20, 50, 100, or 200 moving average. Let's use 50. Okay, so what is this? It measures, the moving average measures the last 50 days moving price, okay? Average price. So when we're looking here, for example, 4th of February. So the 50 days before, moving average is here by 1.10. Okay? If we are looking on 26th of May, the 50 days moving average price is by 1.08. All right? And now how we can use moving average? Moving average is basically supports basically the value levels, like support, and I explained the support and resistance levels in my last tutorial, right? So we need to know support and resistance lines to identify our value points, where is entry or exit. So in this case, moving average can help us. As you see, the moving average follows the trend, and basically it shows us its highest or lowest points, its resistance or support lines. For example, on this point, it follows the trend. It follows the trend and showing the resistance line. Here, it's showing the support line. Okay. Also here, it's showing us resistance line. Here, the support line. So basically, when the price is under moving average, we already understand that trend is bearish. Okay, so we can, if we're trading on the following the trend, then we can sell. Let's see. For example, on 17th of June 2019, the price breaks out the 50-day moving average, right? And we see that price is going down. So in this case, we could start already selling, and as you see, the price follows the trend and goes down to 1.089. Also here, on 21st of January 2020, it breaks out the 50-day moving average, and then till 21st of February goes down. Now the second indicator is Bollinger Band. Okay, now I will put Bollinger Band, and I will delete moving average because the Bollinger Band has moving average itself. Inside of Bollinger Band, we have a moving average. Okay, you see, moving average is in the middle, this brown line. These lines you can change yourself as you want. Okay, you click on style and you change lines and colors as you wish. So moving average is in the middle, and we have two upper and down lines. Also, we can change here the day length of moving average. In this case, I have 20. Let's change on 50. Now I have 50-day moving average, which I explained before. And also in Bollinger Band, we have upper and down lines. Okay. So what are these upper and down lines basically? These are just, how to say, proportional lines for moving average. Let's say the upper line is 50% above of moving average, and down line is 50% under moving average. So how can we use now Bollinger Band? As I said, the moving average is helping us to identify support and resistance lines, right? And also the trend. If price is over the moving average, it means the trend is bullish and uptrend. If price is under moving average, then it means trend is bearish and price is going down. Now, the lower and upper lines of Bollinger Band can help us to find value points. What does it mean? The value point is when price is very low, where supply is very high, demand is very low of the product, and very close next hours or next days, depends on the time frame which we use, the price will reverse and start going up or going down. If we are following the trend which is bearish, for example this one, and we find a value point which is lowest point of the price, which is support line, if we find this value point, it means the price should reverse and we need to buy the asset, right? In this case, many traders make mistakes. Many beginners make mistakes also. When they see that price is going down and it's going down quite long, they think that, oh, now trend is bearish, it's going down, so I will sell, I will make money on sell. But this is not correct. Maybe when we don't know how to use indicators, we will miss the value point when the price arrives to its support line, to its lowest price, and it will start reversing. And without experience, we will think that price will continue going down or going up, and we will follow the trend and make wrong decision. In this case, Bollinger Band is really one of the good indicators which indicates the value points. So let's see how. When we see the candlesticks are going down, it means trend is bearish and arrives to the lowest, to the low barrier, low line of Bollinger Band. It means already that demand is low and supply is very high, and sometime soon, it should reverse. So as you see here, last long candlestick on 31st of June arrived to the lowest level, lower line of Bollinger Band, and the very next day it reversed and started to going up. Okay, similar happens here. On the 2nd of September, we see the last red candlestick is already out of Bollinger Band, out of lower line, and right next day it's starting to going up. And similar here, on the 30th of September and on the 1st October already it started to reverse and going up. Also, similar happens when the price arrives its upper line, the Bollinger Band's upper line. As you see, then price arrived upper line of the Bollinger Band and then started to reverse. Then again, on the 1st of November, arrived to its upper line again and reversed. And the same happens very often. Of course, it's not 100%, not always happens the same, but often it happens so that when when candlesticks are down to the lower line of Bollinger Band, anytime soon it will reverse and going up. Or when the price is near to upper line or over the upper line, out of upper line already, then it means price is very high and very anytime soon it will reverse and go down. So again, the moving average helps us to identify support, resistance line, and also the trend, to understand the trend, right? if it's bearish trend, bullish trend, and the Bollinger Band helps us to find the value points. Now, also the stochastic RSI. Stochastic RSI also helps us to find value points. So this is stochastic RSI. It has two blue and red lines and this violet band in the middle, and the numbers, of course. The upper 100 and the lower 0, 50 in the middle. To understand it easier, we can use this similar as Bollinger Band, okay? We can, for example, put a horizontal line in the middle on the 50, and this will be our middle line. As soon as we see that price, the lines, the blue and red lines are over the middle line, it means already that demand is high. When we see that lines are under 50, means that demand is low and supply is high. But it's not 100% that when we see the price is over the middle line, which is 50, we need to buy or we need to sell. The best point, the best option is to find again the value points when the price arrives its maximum or minimum. I'm sorry, it's wrong to say maximum or minimum because there are no maximum minimums, but when it arrives its support or resistance lines, and then we jump into trade and trade on breakouts. So in this case, when we see that price is over 80, the red and blue lines are over 80, right? Then it could be for us a signal to sell. Or when the lines are under 20, which is, for example, this point, this point, this point, then it could be for us a signal to buy. And let's see, now combine Bollinger Band and Stochastic RSI together. What do we see here? We see that the price is bearish, strong movement down, okay? And also on Stochastic RSI, we see strong movement down up to from 31st of January to 20th of February, right? So this level could be for us already a signal for jumping into trade, okay? If we would jump to, for example, here in trade, then it's quite early, but we could take a long stop loss, for example, high stop loss, and on 21st of February, it would already reverse and we would make quite good profit up to here. And then also we follow the Stochastic RSI and we see that on this point somewhere here is already the levels are high and the blue and the red lines are over 80 of stochastic number, right? So it could be for us a signal to sell. And we would sell, and on 10th of March it would start to go down again. This is very strong movement now, which I make example. This is very strong movement, and this doesn't happen usually. This is cause of coronavirus crisis, right? This doesn't happen usually. So now let's see what we have in usual trend. For example, this very beautiful up and down movement. On this movement, it's better to put 20-day moving average, and you see the Bollinger Band follows the trend. Now, how we can use Bollinger Band here? The trend is bullish, it goes up, the last candlestick comes out of Bollinger Band, upper line. So it can be signal for us to sell. We sell, the price goes down. Then on 24th of January, the last candlestick arrives to its lower line. It can be a signal for us to buy, we buy. Then it goes up again, then it goes down. This is really beautiful moment where we could make profits exactly with helping of Bollinger Band and Stochastic RSI. Anytime it arrives its upper line, it reverses, comes down. Anytime it arrives to its down line of Bollinger Band, it reverses and goes up again. Okay? But as I said, this is not 100%. Not every time it happens like this. For example, here arrives upper line and it reverses, but doesn't come down to the lowest point of Bollinger Band, and it reverses by its moving average. Okay, and that's why we need different type of indicators also. For example, MACD or pivot points to identify resistance and support lines on its particular time. Okay, because on 20th of March it can be different resistance line than on 25th of June. That's why there are also other indicators, as I said, for example, pivot point or Fibonacci retracement, to identify exact support and resistance lines in concrete time. Okay. So we have only almost 9 minutes left. So let's make a small review of what we have talked today. I explained three indicators of technical analysis: moving average, Bollinger Bands, and Stochastic RSI. And also I will add as a bonus, the moving average is different, as I said. We can have 10 days moving average, 20 days moving average, 50, 100, or 200. It depends on what time frame we are trading. If we trade daily time frames, then moving average would be comfortable if we take 20 or 50 or even 100 day average. If we trade hourly or 15-minute, let's see, hour, then it will be comfortable to take 10 or 20 moving average. Let's see, 10. And as you see, 10 moving average is quite good for this trend right now. It follows the trend. You see, it follows very beautiful. It follows the trend. Also, 20 would be okay. 20 would be okay. Yeah, it follows the trend also, but I think you recognize the difference, right? The moving average of 10, it follows better than 20. If we go on weekly, for example, weekly frames, then we can use 100-day moving average. Okay, because when we go on weekly time frames, it means that we are investing at least for half year or 1 year. And then we see that the moving average follows its support and resistance levels, but in long term, right? It doesn't follow like every candlestick, but it follows the longer movements. Also similar will be with 200. It's even longer. In this case, 200 moving average follows better than 100 leverage. 100 moving average, I'm sorry. You see, it follows the trend, so we can see here the breakout. We can see here the resistance line. It's so visible, the resistance lines, right? The moving average of 200 days follows the resistance line of Euro USD. Okay, second, we review the Bollinger Band. And I said the upper line and down line principle, how we can use these two lines to identify value levels, to identify when demand is high and supply is high or low. And stochastic RSI, which is similar to Bollinger Band, and I explained the principle of stochastic RSI and how we can use this to identify again the value level. Value level is the level where we find entry or exit point. Okay, basically this is all what I wanted to say for today. For the next meeting, I will review another indicator, MACD, and also Fibonacci or pivot points. I will decide this later. But let me tell you already now that MACD is an indicator which helps us to find breakout points. Do you remember in the beginning of our meeting, I said we can trade the following the trend. If the trend is bullish, then we follow the trend and we buy, or we find the breakout level, which is value level also, and we trade on reversal. Okay, so MACD basically helps us to find these breakout levels, and pivot points or Fibonacci helps us to find support and resistance lines. It doesn't help us, it gives us directly the levels of support and different support and resistance lines. It gives us like first support line, second, third, and first resistance, second resistance, third resistance, and then it depends on our risk appetite, which level we choose, and how big the risk we take. Okay, this is all what I wanted to say. Thank you for listening.